Gregory Ricks starts in 5 minutes. Find Winning at Life basically everywhere. You can find us on Facebook, Twitter, YouTube, iHeartRadio, Spotify, Periscope, Twitch, Dailymotion, DLive, Smashcast, Stitcher, Apple Podcasts, Google Podcasts, CastBox, Castro, Podomatic, Overcast. Did I say Spotify? I think I said Spotify. Anyway, we're everywhere. We prefer you listen on the Winning at Life app, and you can use that app to find us on your preferred platform. Stand by, the show's starting soon. Winning at Life with Gregory Ricks starts in 4 minutes. If you're interested in learning more about money and the financial world, have you checked out the Ask Gregory podcast? The Ask Gregory podcast has financial topics covering everything from how to handle your 401k to Social Security rules to student loans to precious metals. It's all the best segments that we've done on Winning at Life, and we condense down into specific topics by episode. So if you want to know more about money and investing and retirement, that's a great place to start. Find the Ask Gregory podcast on the Winning at Life app, iHeartRadio, Spotify, podcast app on your phone, and about 1,000 other places. I mean, don't go do it right now because the show's about to start, so just sit tight. Winning at Life with Gregory Ricks starts in 3 minutes. Hey, I'm your co-host, James Parker. You can find contact info to some of our show partners, including the Total Wealth Authority, on the Winning at Life app. If you're looking for a financial advisor, start your search with Gregory Ricks and Associates. If you have a mortgage issue, try Dwayne Stein at Mortgage Gumbo. If you have tax issues, try Jude Heath, CPA. And if you have some estate planning questions, try Wes Blanchard. These are all members of the Total Wealth Authority. You hear them on the show on a regular basis, and they're all linked on the Winning at Life app. Winning at Life with Gregory Ricks is starting in 2 minutes. You can listen to previous shows on demand with the Winning at Life app, the iHeartRadio app, Spotify, whatever. It's just the Winning at Life podcast. Now, that's different than the Ask Gregory podcast. The Ask Gregory podcast is episodes sorted by topic. If you just want to hear recent shows on demand, like yesterday's show or the show from Saturday, that's the Winning at Life podcast. It's available everywhere as well. The Winning at Life app, iHeartRadio app, Spotify, Apple Podcasts, Google Podcasts, the whole drill. Hey, why aren't you already following Winning at Life on all of our social media platforms? You can find us on Facebook, Twitter, YouTube, iHeartRadio, Spotify, Periscope, Twitch, Dailymotion, DLive. All these places are linked directly on the Winning at Life app. So download the Winning at Life app, whatever platform you prefer. Find us there. We'll come to you. Stand by. Winning at Life with Gregory Ricks is going to start in just a moment. Winning at Life with Gregory Ricks starts in 1 minute. Have you downloaded the Winning at Life app? You can listen to the show live. You can also watch the video version of the show live, or you can listen or watch to recent shows of Winning at Life on demand. There's no cost to you. It's in your app store, the Winning at Life app. Welcome to Winning at Life with Gregory Ricks. I'm your co-host, James Parker. Thanks for hanging out with us today. Stand by. The show is about to begin.
Hey, y'all. Welcome to Winning at Life, the Money Show. Weeknights here at 7. I'm your host, Gregory Ricks. Let's talk about some money tonight. I've got some ideas for you. Maybe some tips that will help you make some better financial decisions. And what we need to do is avoid some of those knee-jerk ones as well. They tend to cost you a lot of money. Here's the number to join the conversation. It's 504-260-0995. Yep, that's it. 504-260-0995. If you have a financial situation, not sure what to do, maybe it's how to get some interest. You're not happy with the CD renewals. We got a call about that last night on the show. What about your 401k? Recently we had a caller that is like, looks like I'm going to lose my job. I'm not going to take the shot. So I need to do something with my 401k. Well, we can help you. We've even got a download to suggest for you on that. What about saving for kids' retirement and where to invest it? See, those are some examples of some recent callers that have called in, as well as emails. That's info@gregoryricks.com, or reach out to us through the Winning at Life app. You can text, email, call the show through the app. The text, what's really happening there? Well, I'm not texting you back, so you don't have to worry about that. But the app, you can text through the app, and actually what's happening there is the app's turning it into an email and sending it to me over at info@gregoryricks.com, and we'll cover your question there as well. And you can watch us over at Facebook Live. We've got a bunch of viewers over there that tune in with us every night and watch the show. That old-fashioned way, here's the number again, 504-260-0995. Any news to mention, James, today? I know, like, some people might be waiting on that jury out there. Yeah. They're going to be a while. It don't matter.
That seems to be dominating the topic of conversation in most of the news. But on the financial front, I saw there were a couple of positive revisions to the previous quarter's numbers, and the fact that they they found 600,000 jobs that must have been created. And I
found them?
Yeah, I didn't know they were missing. But I think this goes back to this is the final revision from the second quarter, or is this the first revision of the third quarter? I think
it's second.
Yeah, so I was just hearing about that revision this afternoon. I didn't have a chance to look into it. I figured you might know something about it. But it's, there's a lot of reasons to be optimistic, and there's a lot of reasons to be pessimistic going forward. And so, I try and think when people listen to the show, what are they trying to get? Like they want to learn more about money, but also know what's coming up ahead. And I got to say, the windshield looks really blurry in this current situation. You can make a really good case for a breakout economy that grows for the next year or so. You can also make out a case that it's just going to stop dead in its tracks. You can make a case that it's going to pull back.
Which case do you want me to work on?
Whichever one you think is, has the heavier weight. You can't say one's going to happen for sure, and you can't put dates on it.
Let's go again. Give me the first one.
Okay. The economy could really... It could take off, at least over the next year or so.
Yeah, and the reason for that is the Fed has not stopped that bond buying program. They're winding it down. We're not expecting interest rate hikes to start before the midterm elections, because it's going to cause negative markets. Last time they were rising interest rates was during Trump's term, and yeah, he wasn't too happy about that either back there. And the government's still in this easy money policy. They're passing bills that are putting more money out there and more spending. Yeah, increasing debt, got to pay the piper later. But that's the reason we could see things going. And, until they start overtaxing corporations again, there's going to be profits, and profits drive stock prices up. So there's your reasons to think that for the next year, the market could continue well.
So the next one is the market kind of stops and stalls in place. And I don't mean like we're going to have 0% growth. It'll be kind of like the first term of Obama where you got like 1% growth, maybe 0.8% growth.
Yeah, if they do things to bring worry on that causes investors to start pulling back. What drives up stock prices is those willing to pay more for that stock and buying, and basically they're investing in future expectations. An example of Rivian that just became publicly traded. It's ridiculous valuations, but they're pricing in that this is going to be a super successful electric truck company in the future. That's what they're pricing in, just like they've done with Tesla's evaluations. So where they're not going to price in future value because they said, look, things aren't going to do well. So I'm willing to pay less for that stock, but not more. We could see interest rates coming earlier. The bond buying reduction happens quicker. Inflation continues to worry people, which gives them more reason that interest rates are going to move up. So there's where this pause could happen. And you could see the first one I spoke of could be well for the first half of next year. And that second one could be the change to the second half of next year that erases the first half gains.
And then the negative outlook, whether you think the tapering is going to cause the market to give a little bit of a convulsion there, whether you think the economy is going to actually die on its own volition, or rather you think that there's going to be some unforeseen black swan that we're just about due for, because we're also due for a correction. And so over the next 12 months, there's a case to be made that the economy could go south.
That temperament is already out there. The administration is not creating confidence in their decision making. There could be that worry that they mess something up. You have worry coming about, looks like they're going to change out the head of the Federal Reserve. And they keep spending, and inflation runs more rampant, that interest rate hikes have to start earlier. As far as the black swan, hey, it could come, but we just had one. So that anomaly is further out. Now let's define the black swan. What we're actually referring to, and not wanting to be scary, but what James had referred to is an event that you don't see coming, but happens, that makes the stock market drop quite a bit, just like COVID and the lockdowns. That December before that, who knew? January before March, who knew?
Mm-hmm.
So that's, it's also another example of something like that is the tsunami that hit Japan. They had a couple of nuclear plants right there on the beaches of Japan. And it didn't cross anybody's mind. One day there could be a tsunami that hits us. So let's not do this right here. Let's move it inland further. This is a bad place. Nobody saw it coming. So they have to deal with what happens. And that's scary. It's different, like things like that are unknowns for investors, and investors do not like surprises and do not like unknowns.
Yeah, and the ultimate black swan, I would say, was 9/11. Nobody saw that coming. There were some people that saw like the financial collapse that came around in 2008 and 2009. Some people were predicting that. You kind of had a little bit of a heads up on the coronavirus, at least like 2 or 3 months. You saw it, started to buy masks before the lockdowns even started. So you could still kind of see those. Boy, the ultimate black swan is when you don't see it coming and then just boom.
Okay, we have to stop using black swan. I hear that's a scary word.
Okay.
We got to stop using that, and speak of, the unknown events you don't see coming is what that part 3 is. And once again, we've not had, in the past 170 years, I think we've probably had a dozen events where the market lost a third of its value. Might not even be that many. So this is a thing that doesn't come along very often there. So some of the knowns are, for example, we have a correction, a 10% correction, about 1.84 years. We have a 20%, about every decade. Now, we've had 2 of those surprise events over the past, a little more than 20 years, but, it was 9/11 was one of those. We also, coming to more current times, then we're looking at the Great Recession, the housing crisis, and then COVID. So we've had kind of 3 of those events in the 2000s. So that's an idea of what's coming. So you could almost call that maybe about 1 every 15 years or something like that. So just think about that. These things are coming, don't know when. And we're actually going to talk about that a little bit more. Surprises out there. I've got a topic here, 5 reasons not to worry about a stock market crash. So we can talk about this a little bit more since James brought it up, but we're not going to use that word you were using again. We're just, don't want to scare anybody. Just surprises that we're not expecting.
The more you talk,
what we expect is the market just keep going up. That's what it'll
be beautiful
That's
forever.
what we expect. Yeah.
But the more you talk about this, the more it makes me think that once I get, the financial plan rolling and I push the retirement trigger and I have everything laid out, I want my plan to be as little risk as possible, as little exposure to these events as possible. And I understand why people are calling in asking about safety all the time. If you got a question, call Gregory, 504-260-0995. We are Winning at Life with Gregory Ricks. If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
What about your pension? When are you turning that on if you have a pension? I know not a lot of you do. Some of you do. How are you making that decision? What if you have a lump sum option? How are you making that decision?
Gregory Ricks and Associates, 504-832-9200 or gregoryricks.com.
With offices in Metairie, Mandeville, Gulfport, and Baton Rouge.
Investment advisory services offered through AE Wealth Management, LLC.
Parents, grandparents, relatives, and guardians, it's Dwayne Stein, your trusted mortgage advisor. Did you know your loved ones spend 26% of every earned dollar on rent? That's 10% more than homeowners. So I'm encouraging you to help me spread the word. With today's lowered rates and loan programs, homeownership is easier than ever. So let Mortgage Gumbo review homeownership options today. Visit snapsendandsave.com. It's that easy.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can hear the Ask Gregory podcast, where you'll find episodes based on a financial topic. So if you're looking for help on a specific situation, there's a good chance you'll find it on the Ask Gregory podcast, including episodes on 401ks, taxes, stocks, Social Security, gold, and whether or not you should buy an RV. Hear the Ask Gregory podcast on the Winning at Life app, your wallet's favorite app.
Less than half of Americans have drawn up a will. If you don't have one, you know you need to get one. But what if you do have a will? Is it up to date? Has anyone in your family been married, divorced, or passed away? Have any new family members been born or adopted? Don't leave your loved ones in a bind. Call me, and we'll make you a plan or update your existing plan. Hi, I'm Wes Blanchard, an estate planning attorney in Metairie. What's your plan? Find me at wjblanchardlaw.com.
The Ricks Report with Gregory Ricks.
What we found through history, looking at the past 90 years, most fund managers don't outperform or perform as well as the indexes. Using indexing, historicals teach us skew a higher return. And yes, there's bad stocks in the S&P 500 as it looks right now, and yet the index is up. I like to use indexed ETFs because those are much lower expense ratios. We try our best in managing our portfolios to avoid trading costs, and we know I've been doing this for 30 years. I've studied trading strategies. You're not going to outsmart the indexes. You may get lucky, you may get unlucky.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC. Investing involves risk, including the potential loss of principal.
Hey
there, how you doing? This is Winning at Life with Gregory Ricks. Welcome to the Money Show. If you got a question for Gregory, 504-260-0995. Why would you want to call? Because Gregory's been a financial advisor for a few decades now, been answering questions on the radio for the last 11, going on 12 years here. Had a lot of practice helping people with their financial questions. You could be next, 504-260-0995, or you can give us a call or text from the front screen of the Winning at Life app.
Well, I was double checking a stat I gave you earlier. I was right. Stocks over the past 170 years have lost a third of their value at least 12 times. Inflation has exceeded 7% in 20 separate years. So this is not some normal occurrence or something that's just going to keep going like this. We're looking, once again, 170 years, 7%. We've had 33 recessions also in that time period that lasted a cumulative 48 years. And the stock market fell more than 10% from a recent high at least 102 times. So you see, that's going to be more of your norm is a movement of 10%. So that really shouldn't surprise you there from that standpoint. But knowing, once again, stocks have lost a third of their value. You know, that's kind of saying a 30% or more drop 12 times. So once again, that doesn't happen a lot. Another stat I like to give you as well, since we're kind of talking about this, got on to those looking at the market. Once again, if you were looking at the market, I'm going to shorten the time span from 170 years to 71 years. If you look at the market every day, it's up 54% of the time. If you looked at it monthly, it's up 60% of the time. Quarterly, 67. Let's jump over here. Years. If you looked at it yearly, and speaking of looking at that past year, rolling periods, every year, it's up 73% of the time. See, it's a lot nicer than daily. You're unhappy half of the... I was... public event, and I kind of ask, who checks the market every day? Are you happy or unhappy? And a lady yelled out, unhappy. Yeah, I said, well, that probably can be the case because you're checking it every day. But if you look at 5-year rolling time periods, what that means is every year you look at it, you're not looking at past year, you're looking at what has it done the past 5 years. It's up 79% of the time. 10-year rolling time periods, it's up 89% of the time. And so far, if you were to look at 20-year rolling periods, it would be up 100% of the time. I don't know if we did the did we give the phone number to call coming in from the break? I don't remember. You did it. I'm used to doing it, so I don't remember that. But if you want to join the conversation, you want to talk about this, 504-2600-995. Just give you, and actually I'm going to break something else tonight here, and I just think we should do it. But first, this is James last week with the show. And his last day will be on the Saturday show that we do that. James and I have worked together on this for, I don't know, about 11 and a half years.
We're right at 11 and a half, yeah.
Yeah. So as things always do, there's always change in the wind. And so you want to tell them what you and your family are doing.
Well, we're going back to the motherland for me. I'm originally from Texas. I've been here 15 years, but got an opportunity opened up for me to be back in the hometown around my side of the family. So we're going to go pursue that, and the grandkids will get to play with their other cousins and see their other aunts and uncles on more often basis. And New Orleans will be what it is for most of the people in the area, someplace you go to have fun and on vacations and on holidays. And, it'll change because now New Orleans will be where I come for Christmas. New Orleans will be where I come for the 4th of July. I'll come visit New Orleans for Mardi Gras, and then I'll get to go back home and not have to deal with all the traffic and trash.
So I see. You've taken the fun out of going to Texas now because that's where they're going to live.
That's where work's going to be,
It used to be a fun place.
Well, yeah, Texas used to be the place where you go and the kids get to play on the trampoline, go swimming with their cousins, and we just get to hang out. And Texas is going to be the place where they work and go to school, and New Orleans is going to be the fun getaway now. But I'll still be around, so you can't kill bad grass, Gregory. You're not done with me yet.
I'll give you the other piece of news a little bit later. Let's get back to 5 reasons not to worry about a stock market crash. Stock market crashes happen. I've given you a little bit of history there. 170 years, there's been 102 times that it moved 10% or more. We've had, 12 times it's lost a third of its, about 12 times over 17 10-year periods. So it does come, but if we kind of broke down the math, you kind of look, and it's not and we're not trying to average, it just happens. And what does it do? It recovers. And another reason I gave you those stats about rolling 5-year, 10-year, and 20-year periods. See, the good news is you can coexist with these drops and you can grow wealthier despite them. Number one reason is you've probably heard us urge investors to keep any short-term money out of the stock market. That's a good question when somebody says, well, I sold this property, I've got $200,000. What can I do? I'm thinking about putting it in the market. Well, when might you need that money back? Well, maybe a year or two. Market's not a place for it. Only invest money that you won't need for at least 5 years. Why? I just went through the 5-year rolling periods. That means based on the past 5 years, you have a 79% chance based on past 71 years to come out ahead. And so your odds are pretty good, and you probably don't have to go much longer beyond that for it to cycle in your favor. And perhaps 10 years to be more conservative. Why? 10-year periods give you 89% chance of being up. That's because market downturns happen, and you don't want one happening right before you're going to sell in order to have money for a down payment or college tuition. So assuming you're a long-term investor, you shouldn't be needing to sell any holdings anytime soon. So a stock market crash shouldn't worry you. I'm going to give you some other numbers here in the next segment about that and how that correlates to taking income. The stock market number 2, the stock market crash might not be around the corner. So don't spend too much time worrying about a stock market correction happening, because it might not happen anytime soon. You know, and I kind of went through some timing there, but imagine it's the end of 2008 and your portfolio is hurting from one of the biggest single year losses the S&P 500 has experienced. You may expect the market to recover in 2009, but you probably wouldn't have expected a gain of more than 26%. Then 2010 was also an up year. And 2011 again too. Maybe a small one, but it's reasonable to expect a down year next, right? No, the S&P 500 jumped 16% in 2012, then soared 32.4% the year after. So lots of people were worried about the market crash at that point, and there'd been 5 years of gains. Now we can go back to the early 2000s. You had 01, 02, 03 were negative double-digit years there. So once again, the lesson though is on average, market corrections or drops of at least 10% happen every 2 years. I give you a little tighter number. It's typically about every 1.84 years. Crashes, number 3, are followed by recoveries. You know, it's obvious. I gave you some numbers there, but it's worth remembering that every single stock market crash or correction has been followed by what? A recovery. Number 4, crashes deliver bargains. So the most wonderful thing about market corrections and crashes is they produce bargains. Most stocks that you love to own at the right price may suddenly be at a very, very good price. And number 5, paper losses don't hurt. Last reason not to worry about stock market crashes is that paper losses don't hurt. If your shares of your stock were once at $100 a piece or suddenly worth $75, you hadn't lost any money. Why? If you haven't sold the shares, you've not locked in the losses. You've referred to as a paper loss. It's just a loss on paper, not in reality. Long-term investors are likely aiming to hang on to their shares for a long time. So long as they don't sell, they won't realize a loss.
504-260-0995. I'm James Parker. We're Winning at Life with Gregory Ricks.
You all are so good. I've listened to you for years.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I am near retirement, and I wish I would have been listening to y'all for the last couple of years.
Learn the ins, outs, do's, don'ts, rules, and tools of the financial world.
I have a broker. He has no idea what you and I just talked about.
From your 401k to your IRA to your pension to your Social Security to your Medicare.
Hi, Greg. Appreciate your service to the community.
From your ETFs to your precious metals.
Your program helps to ground me. There's some personal, real life there.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify, and wherever else you can find podcasts, probably.
That's exactly what I needed to know. Hey, I love your show.
Investment advisory services offered through AE Wealth Management, LLC. The firm is not affiliated with the U.S. government or any governmental agency.
If you've been listening to Winning at Life for a while now, you probably already know that estate planning is more than just a will. You may need a trust. You definitely need both of your powers of attorney. So what's your plan? Hi, I'm Wes Blanchard, an estate planning attorney with offices in Metairie. Listen, don't leave your loved ones in a bind. Call me and we'll make you a plan or update your existing plan. Find me at wjblanchardlaw.com.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can listen to the show live 6 days a week. And if we're not on at the moment, you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
Most people think of Crime Stoppers as only a tip reporting line, but we're so much more. Crime Stoppers GNO has worked in our area schools, offering prevention presentations on trending topics from drugs, bullying, online safety, suicide prevention, and much more. And we have a high school teen leadership program which provides students with a first-hand look at the criminal justice profession as a future career, while learning to be an advocate for their fellow students. So to learn more, visit safeschoolsla.com or call 504-837-8477.
Fox News, I'm Laura Cantor. The defense asking for a mistrial on the second day of jury deliberations in the Kyle Rittenhouse murder trial.
The jury here in Kenosha County in its second day of deliberations asked questions related to images, including the controversial drone footage shown at trial, that the state pins its provocation case on, a higher resolution version that the defense says the state sat on until all evidence was closed, as prosecutors blamed the error on technology.
Fox's Garrett Tenney in Kenosha, Wisconsin. Another Democrat is retiring from Congress.
Many, like California Congresswoman Jackie Spear, citing personal reasons. But the major gubernatorial loss in Virginia, combined with slow delivery on the president's agenda, puts the Democrats' narrow House majority at risk in the midterms.
Fox's Aisha Hasni. America is listening to Fox News.
Winning at Life with Gregory Ricks is a copyright of Down South Strategies for the private use of our audience. Any unauthorized use of this broadcast without express consent is prohibited. For podcasts, show information, and contacts to our sponsors, go to winningatlife.com or download the Winning at Life app. If you've got a financial situation and you're not quite sure what to do, you better call Gregory. We are Winning at Life with Gregory Ricks.
Hey there, how you doing? This is Winning at Life with Gregory Ricks. You are listening to The Money Show, and if you got a question for the financial advisor across the table from me, his name's Gregory Ricks, and you can grab your phone and call him right now, 504-260-0995. And you want to see how easy it is? Watch this. Keith in Van Cleve. You're on Winning at Life with Gregory Ricks. How can we help you, Keith?
Yes, sir. My father passed away last year, and he left me with a traditional IRA and a Roth IRA, which now have returned inherited. And I didn't take any RMDs last year due to the COVID, and found out I didn't have to. What I need to know is, how do I go about doing my RMDs? And since one is a Roth and one is a traditional, are they handled different?
When did he die?
He died July of last year.
Yeah. Here's the deal. You don't have to take any RMDs, but you have to have all the money taken out of the account before the end of the 10th year. So you might want to start systematically. The Roth, you probably would like to wait. It's not a taxable event, but the traditional, you probably should start averaging that out. You don't want to create a large, I didn't ask you the sizes, but if you wait till the end, all of it's taxable at once versus spreading it out.
So the Roth isn't a taxable event then?
No, that's tax-free money.
Okay.
You inherited. You just have to take it all out within the next 10 years. And so the traditional is taxable, and yet you have to take it all out within the next 10 years.
Okay, so my best bet right now, tax-wise, would be then just work on the traditional, and then with the Roth, I could just let it accumulate, or how does that work? Does that become taxable then, anything that it accumulates?
No, it's a tax-free account. The rule now is you have 10 years to take that money out. So...
Great. I was mulling it over. I've gotten several different answers. I've listened to you guys for years, and I'm glad I called.
So what other answers were you getting?
One of the places, I believe it has the traditional, they told me that I needed to take, because they're both in two different locations. One told me I had to take at least $5,000 out this year, and they were going to look into it because something was wrong with their calculator. That's when I started getting a little nervous. And then as far as the Roth, I've gotten your answer, which is I could sit on it if I want, or I need to start taking the RMDs because they're both going to be taxable events.
Yeah, everybody might not be up on the rules. The timeline of that are inherited from original owners who have passed away on or after January 1st of 2020. The new law requires beneficiaries to withdraw all assets from inherited qualified accounts as IRA, 401k, Roth within 10 years following the death of the account holder. If it's a minor that has inherited that money, Keith, they have until that clock doesn't start ticking until they reach essentially age 18, age of majority. Then the 10-year clock starts for them in that case. But yeah, that's what the new rules are.
Okay, wonderful. I appreciate your help. That definitely got me headed in the right direction finally.
Awesome. Glad we could help. Thanks for listening to Winning at Life.
Thank you, sir.
You're welcome.
Thanks, Keith.
Well, they can come here and get the correct information. Otherwise, he's trying to do RMDs, and there isn't any for the inherited accounts. It's just, there is one, actually, an RMD. It's year 10, 100% is what that one is. And since we're kind of talking about that, there was a case recently, and this comes up time to time, and I'd say it's frustrating, and some attorneys are going to hate on me out there that's listening, but they make a lot of mistakes regarding qualified accounts and naming a trust as the beneficiary. Here's the line recently that was given. Well, yeah, we heard about that, but they said they structured it in a way that it wouldn't be taxable when it goes into the trust. Okay, I need to see that wording because I might want to show it to the IRS because they've not okayed any like that. See, the thing is, on a IRA, you have to have a human as a beneficiary. If it goes into a trust, it's a taxable event. And I was having a discussion with a gentleman, and I said, well, yeah, your family, because of the way you've done this, your family's going to end up having all those taxes paid all at once, and it's going into a trust, and that's a taxable event. And you won't know it happened because you didn't think it was happening. The attorney said it wasn't going to happen, but it did happen, but you won't know about the mistake because you're dead. I'm letting you know now what's going to happen. And I said, first off, you really don't need a trust unless you've got a special needs child or some situation like that, because an IRA goes by contract. It goes by a beneficiary designation. If you've got 5 people, you're wanting to split the $500,000 and they're each ending up with $100,000. So essentially say, well, each gets 20% of the value of the account. And you name them. They are going to be the beneficiaries of that. And what normally happens if you were working with us, we custody assets at Fidelity Investments. So we would set up for each of them an inherited account that's properly titled, denoting that it's an inherited account from you. And then their part of the money is moved into that account. And they can move it somewhere else. They can invest it however they want. They could rapidly spend it or take the next 10 years in doing so. But if you name a trust, I don't recall having birthdays or a born on day. You know, it's not a human is what I'm trying to get at. And a trust is going to be taxed at what tax rate? Maximum tax rates. So if you're out there listening to me and you realize, like, gosh, did we name a trust as our beneficiary? Then you need to call whoever you work with and get that fixed. If you're unsure about who's giving you advice, call my office. It's 504-832-9200, GregoryRicks.com. We are always on the lookout for these things happening, and I train my people and my service team when beneficiary form changes come in, and it has to do with an IRA being changed to a trust, we're calling the client about it. And this is kind of a routine thing that happens. And I'm pretty good at this stuff. I know how this stuff works, and we don't need to create giant taxable events in those situations.
I think Keith and Van Cleve might need to have a chat with you about tax bracket management and, taking advantage of your margin and the strategies that you talk about on other shows.
Yeah, he probably needs to call the office, but yeah, is there a plan? We didn't get into his values because it wasn't a situation to discuss that. It doesn't matter what it's worth. He doesn't have RMDs until year 10. But assuming it has some value, you want to average out of it there. The Roth can wait. It's a nice thing about that.
Yeah, just let it grow tax deferred is sort of the idea on that guy.
Yeah, I just see those happen too many times regarding beneficiary. What do you put in a trust? Now, here's the thing where some people are, reason they're doing the trust is, well, I don't trust Jimmy with that money. He'll just go out and spend it on fast cars or whatever the reasoning is. And, well, the IRS didn't help you on those rules, but if you want to take control of that money, you're probably going to create a taxable event. Technically you can do a pass-through trust, but still, once again, that's only controlling it for a short period of time because all the money has to come out by the end of year 10. So one of the things to do is maybe take some of that money and change or purchase life insurance. Think about that. You can take a portion of that qualified money, buy a life insurance, and you set up that where those benefits go into a trust, and then you have total control over that money because, let's see, life insurance, is that a taxable event? No, it is not. So you could convert that qualified money to non-tax money by taking a portion of it, buying life insurance. Neat idea there.
All right, you want to be next? Call Gregory, 504-260-0995. I'm James Parker. We are Winning at Life with Gregory Ricks.
I'm going to plug what we kind of do as my day job during the week. We help you with your money. We're money managers, we're strategists, income planners, investments. Another is healthcare, whether it's long-term care or Medicare, and having supplements and such, estate planning. And then the fifth part is tax planning, creating tax efficiency. Regardless of the area you're listening to across the country, we can do video meetings. We can start with a phone call, do Zoom meetings. As far as in office, I have an office in Gulfport, Mississippi, in Mandeville, Baton Rouge, and also in Metairie, Louisiana. So the office number is 504-832-9200. The website is gregoryricks.com. And I look forward to hearing from you.
Investing involves risk, including the potential loss of principal. Investment advisory services offered through AE Wealth Management, LLC.
Mosquitoes. We know them as flying, blood-sucking pests, but did you know that mosquitoes are actually highly intelligent? They can smell human breath, our sweat helps them choose their next meal, and they use our body heat to find just the right place to bite. Outsmart mosquitoes with help from Mosquito Joe. Mosquito Joe has this time-release capsule that they spray that slowly releases its mosquito death over a course of a month. NewOrleans.mosquitojoe.com. NewOrleans.mosquitojoe.com.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
My mother just inherited a couple of annuities.
If you could explain the difference between a government pension offset and a windfall elimination provision is.
You now make too much income to contribute to a Roth IRA.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
You all are so good.
Investment advisory services offered through AE Wealth Management, LLC. The Ricks Report with Gregory Ricks.
So part of our invest 50-50 money management philosophy is to use stock ETFs. We like the indices. We're not going to beat them, so let's join them. Somebody will say, well, what's your track record? Well, what's the track record of the S&P 500? Because that's what we're using, the Dow, the NASDAQ, and some of the sub-indices there. Well, what are you doing on bonds? Well, we like those on the ETFs because I'm not in the buying houses and selling houses business. You know what the pain it is to sell a house? Well, that's kind of like selling a bond. You got to list it and wait for bids. I'd rather do it inside of an ETF that has low expense ratio and let the institutional guys help with that selection.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC. Investing involves risk, including the potential loss of principal.
We ain't playing nothing slow at the parking lot party. A tailgate buzz just a sipping on subs. Ain't never too early to light one up, fill up your cup. Cause I ain't no party like the pre-party and after the party.
Hey, y'all. Welcome. You're listening to Winning at Life, live financial news talk radio. Let's see here. What's that rate increase, James, for Social Security next year?
The two numbers are 5.2 or 5.9. One of them is the inflation rate and one of them is the cost of living adjustment.
I think it's a 5.9. Trying to pull that number up. You know, we get all these numbers and they run together and we get a inflation adjustment every month. But yeah, it's 5.9 is the boost to benefits, which is bringing us to the really big increase that you're not going to like. Medicare Part B premiums for 2022 jumped by 14.5%. Yeah. The standard premium for Medicare's outpatient care coverage will jump by 14.5% for 2022. It's a heck of a lot more than what they were estimating. They were estimate of 6.7%. That's a big swing and a miss. Standard premium for Part B, which covers outpatient care and durable equipment, will be $170.10 next year, up $21.60 from $148.50. That's taking a check out of the, making a dent in those checks, in that increase they were receiving. The program's trustees had estimated this summer that the premium would be $158.50. But that's not the end of it. The deductible for Part B will be $233, up $30. That's a 14.8% increase from this year. The bigger than anticipated increase is partly attributed to rising prices, utilization across healthcare system, and congressional action that limited the increase in 2021. So once again, inflation catching up. Meanwhile, the deductible for Part A, which is the hospital coverage per benefit period, which generally starts when you are admitted to the hospital, will be increased $72. So that amount is $1,556 in that case. Let's see, what's next here? Well, I'm going to go ahead and do this at this point in the show and talk about another change that's coming. You know, we've been doing Winning at Life for 11 and a half years, the show. It kind of started on Saturday morning, 9 a.m. show. Then it moved to mid-morning at 10, evolved into a 3-hour show, which we still do on Saturdays and will continue to do. But we do a Saturday show from 10 a.m. to 1 p.m. every Saturday. We typically have some guests. This Saturday we have Wes Blanchard, estate planning attorney. And we'll have to talk to him about these people making their trust bennies of their IRAs, why that seems to happen so much. And then we've got
Dwayne Stein,
one of our fun guests. We're going to see what we're going to prod him a little bit about Zillow. I think he's kind of passionate about getting after them and mistakes they've made, losing some $500 million. But that's what we've kind of got lined up for you. And of course you have me. I've got a whole bunch to talk about on Saturday. But we've been doing and then it evolved into having a weeknight show that we've been doing for, I don't know, around 6 years now, from 7 to 8 every evening, bringing you financial news, tips and such, and which is made for some long days for years for me, because I get up in the morning, start reading, and I'm CEO and founder and advisor and money manager over at Gregory, Ricks and Associates, the Total Wealth Authority, and we had a few events over the past year that caused us to run best ofs for a period of time. We had some technical problems. James had COVID. I took a vacation, so it was I had a month off. There was another period about a year ago that we ran several weeks without a show on weeknights, ran best ofs, and I was like, gosh, this is what being off in the evenings feels like. And it's like, gosh, this is good. Then we go back to doing the show, and I'll tell you, where I'm at, I'm still busy with the firm and looking out for people's money. And a few months back, I had the person that handles my TV, radio, and contracts and negotiations. I asked her to see about getting me out of this show on weeknights. And so we went about doing that, had asked for a release from doing the show on weeknights, that we would like, that I was tired and wanted a break from it. And so we started about that. There was some resistance there, but I said, well, I want to keep doing the Saturday show. And if you force me, I said, I don't know if I'll want to do anything for a long time then. So everybody calmed down, and we had some good discussions. And yeah, the Saturday show's going to continue, but December 24th is the last weeknight show for Winning at Life. So just thought I'd share that with everybody. This was first release of the news. I've known about it for a few weeks now that I had been given the release.
Yeah, and I think people understand what a horrible schedule it is to have to roll through and run a business all day and then have anything to do from 7 to 8, 5 nights a week. Even if you had to just go sit in a room in a designated area and do nothing, it would disrupt your entire life. Think of all the things we missed, anytime anyone invites you to dinner, it's basically a no, unless it's a Saturday or a Sunday.
Well, it's impacted you. Your life is changing somewhat too, because you're not doing a weeknight show this time. I don't know what your future holds for it, but you're going to work in radio and may already have plans for that. With that said, it's coincidental on the timing of that. You and I didn't have discussions and planned this together, but I do want to keep doing the Saturday show that I do on 3 hours every Saturday that's live, but it's just kind of time, because it's not only that like I left the office and actually got out of there, I'd say on time today was 5 o'clock, but then drive home and the studio is in my home essentially. So that made it easy. When we started Weeknight Show, I'd have to drive downtown, but I still have to prep for the show, and knowing regardless of what I'm doing, the clock is ticking. I've got to be in the studio for 7 o'clock, and I'm there for the hour, and then I'm done a little bit after 8 o'clock. So, you know, it makes for a long day, and those evenings aren't there. So it's kind of nice to get that taste again after like years of doing this. Like, gosh. And I think it's best for me, my family, and also in that mix, what's really important is the company that takes care of all the clients. And I think it's really, really important for them so that I don't ever reach a burnout. And that's what we're working to avoid.
Right. Well, since we started the weekday show, it hasn't been a whole lot of pile on for me. My life hasn't changed that much. But when we started this, you only had one location. Now you have 4. And so I have watched every year as the work just piles up on you and your schedule gets worse and worse and worse. And if people are ever wondering why you take a bunch of time off, try Gregory's schedule for a couple years and then get back to me when you hear the next best of.
So with that said, just everybody share out there that we're still on Saturdays from 10 to 1, and you got us for a few more weeks on weeknights, and so the show will be ending December 24th. Will be the last weeknight show of this year and going forward.
But the business will continue. Gregory Ricks and Associates.
Business
that's the same
is
as
fine.
Ever. Yeah.
The Saturday show's fine. The business is prospering. We're busier than ever. Excited about the future and helping people make better decisions with their money.
And if you want to contact Gregory at Gregory Ricks and Associates, 504-832-9200, or go to GregoryRicks.com. I'm James Parker. We are Winning at Life with Gregory Ricks.
Investment advisory services offered through AE Wealth Management, LLC. Winning at Life with Gregory Ricks is for informational purposes only and does not recommend the sale or purchase of any specific securities, investments, legal advice, or tax advice. Investing involves risk, including potential loss of principal. Roth conversion is a taxable event and may have several tax-related consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. The information and opinions contained herein are provided by third parties and have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed. Neither AE Wealth Management nor advisors providing investment advisory services through AE Wealth Management recommend or facilitate the buying or selling of cryptocurrencies. The firm is not affiliated with the U.S. government or any governmental agency. The firm offers insurance services. We are Winning at Life with Gregory Ricks.
WRNO FM, New Orleans, an iHeart radio station. Available everywhere on our free iHeart radio app. #1 for music, radio, and podcasts, all in one.